Okay, let's unpack this. Have you ever looked at the chaotic movements of the market and wondered if there's maybe an underlying beat, a hidden rhythm that repeats itself? If there are specific signals that consistently pop up, offering clues to what might come next, something maybe far beyond just simple trend lines. Well, today's deep dive is into the Nasdaq 100, the NDX, and a really fascinating indicator called the VPA Rhythm Index. Now, this isn't about fortune telling, right? No crystal balls here. It's about recognizing decoding patterns that have appeared more often than expected in market history, almost like the market has its own pulse. Our mission is to cut through the noise, get you informed fast with a sharp understanding of how this index works. We've got a fantastic set of insights from our sources, including detailed chart analyses, explanations of these repeating patterns, stuff we can really dig into.
Yeah, and what's truly fascinating here is how often we actually observe recurring patterns in seemingly complex systems. Financial markets, absolutely no exception. The VPR Rhythm Index, as our sources describe it, it's a unique tool. It's designed precisely to highlight these repetitions. Think of it less like a simple moving average and maybe more like, well, a market's internal clock, or maybe a heartbeat monitor. It analyzes not just price, but the frequency and the amplitude of market movements. It's looking for predictable, recurring rhythms that often show up right before major price shifts. So our goal in this deep dive is simple: help you understand what the VPR Rhythm Index is signaling right now, why these recurring patterns often precede those big moves, and crucially, what actionable insights you can take away. It doesn't matter if you're a short-term trader, focused on quick moves, or maybe a long-term investor looking for those bigger shifts.
A market's heartbeat.
Uh,
I like that. That's a great way to frame it. So let's get into the specifics then, because VPR highlights several distinct patterns that keep appearing. Our first chart, for instance, it shows the Nasdaq 100 index getting close to its daily short-term trend line. That's the one marked in yellow. Now, this might seem pretty straightforward, right? Price nearing a line. But our sources describe this specific approach as a typical pattern that VPR picks up again and again. What makes this particular yellow line approach significant from a VPR perspective? Why isn't it just noise?
Right. It's significant because, well, while it looks like a simple retest of support or maybe resistance, VPR highlights it as part of a recurring rhythm. It's not just about the price hitting a line, it's about the way it approaches it, the manner which VPR actually quantifies. And the source strongly advises against jumping in right away at this point, precisely because VPR reveals this often represents a moment of indecision, or maybe just a slight pause in the market's rhythm. It suggests, you need more confirmation.
Okay, so if VPR is telling us to pump the brakes a bit, what exactly are we waiting for? You mentioned confirmation on a different time frame.
Exactly. And this leads us straight to our second chart. This really shows why that 2-hour confirmation is so critical. If we connect this to the bigger picture, right, the second image shows the 2-hour chart. And what we see is that the current purchase power isn't really reviving. It's under pressure from that short-term trend line again, the yellow one. This isn't just like a lack of buying. VPR pinpoints this specific flow as another frequent pattern. It signifies a waiting for entry signal. The buying pressure simply isn't there yet to align with VPR's underlying rhythm. It's like the market's taking a breath, but the inhale isn't strong enough, not for a continued upward move. VPR gives the context that this isn't just random weakness. It's a predictable pause in the rhythm.
And that patience. That's where so many people trip up, isn't it? It sounds like VPR provides that discipline, visually showing why waiting is the smarter play here. Okay, so we've looked at these short-term things, the yellow trend line on daily and 2-hour charts. But VPR's strength, as you said, is also giving us that broader perspective. Let's step deeper into VPR's insights. Our third chart shifts focus to something really compelling. The daily swing trend line, marked in white this time. What does VPR tell us when the index approaches this line?
Yeah, this is where VPR starts showing its multi-time frame power. When the index approaches this daily swing trend line, the white one, we're naturally looking for a potential rebound, right? But here's a crucial observation from our source, highlighted by the VPR framework. After an initial strong price move, they call it a first wave, the next second wave often shows something interesting. It shows a reduced frequency and size of volatility.
Reduced frequency.
Okay.
So let's bounce.
Exactly. What this means from a VPR rhythm perspective is that the market's energy, its ability to bounce back with real force, is diminished. It's weaker. The probability of a powerful, sharp rebound, it's low. Instead, we should anticipate a more limited flow. A quieter flow, maybe. It's really about setting realistic expectations based on these historically observed rhythmic patterns, not just hoping for a massive bounce that the underlying market energy, which VPR measures, simply isn't supporting. It gives insight into the quality of the potential rebound.
It's incredibly insightful. It shifts focus from if it bounces, to how much it might bounce, and importantly, why. Okay, so we've seen these three distinct patterns VPR highlights. But for our listeners, I think the big question is, how does VPR knit all these pieces together? What's the fundamental power behind it? What does this rhythm truly signify in a broader sense?
That's the key question, absolutely. What ties these patterns together within the VPA Rhythm Index? Well, it's its ability to reveal recurring patterns that are rooted in collective market psychology. Fundamentally, VPR isn't just drawing lines on a chart. It's revealing how the market sort of breathes, how it oscillates. When we talk about rhythm, we mean the consistent ebb and flow of buying and selling pressure. This creates predictable patterns of expansion and contraction. VPR helps us tell the difference between, say, short-term jitters and those larger, more significant swing movements. One concept VPR is particularly good at identifying is compression signals.
Compression signals, like a spring coiling up.
Exactly like that. Imagine a coiled spring or maybe a stretched rubber band. When VPR detects compression, it's signaling that the market is building up energy, but in a tight, rhythmic pattern. This often indicates a higher likelihood of a powerful breakout coming soon. It's not just any sideways market, it's a rhythmic tightening that VPR flags as statistically significant. And conversely, it helps identify rebound signals. It shows not just where price might bounce, but the strength of that underlying market energy to actually rebound from key support levels.
Right, so it's not just, is it consolidating, but is it rhythmically consolidating in a way that usually leads to a breakout?
Okay.
Or maybe just a weak bounce. That's a really crucial distinction. What about these other fascinating terms you mentioned, like trap resolution levels? What's that about?
Excellent question. This is where VPR gets really interesting. Sometimes market movements get trapped, meaning price moves into an area where a lot of traders might get caught on the wrong side, or maybe where previous reversals just fizzled out. VPR is designed to identify these specific trap resolution levels. These are the price points where those prior traps get resolved. It signals a potential clear directional move is starting. According to our sources, these levels historically make for really robust stop-loss placements. Because if price moves beyond them, it indicates the previous setup, the rhythm, has failed. It helps protect your capital. VPR also gives clarity on whether a market is in a true consolidation phase where that energy is genuinely building or if it's just noisy sideways truck, going nowhere fast. And crucially, it helps differentiate that from a breakout zone where the rhythm indicates an imminent directional move. The index pinpoints key levels traders should not miss by highlighting where these rhythmic shifts are most likely to occur. It's not arbitrary, it's rooted in the core of market psychology.
That's a powerful point. Market psychology. We often hear about fear and greed, but how does VPR specifically connect to the why? Why does human behavior lead to these patterns appearing more often than expected? Is it just human nature repeating itself on the charts?
Absolutely. Think about it, right? Fear and greed, they're timeless drivers. When prices fall rapidly, fear can lead to predictable selling climaxes. Everyone rushes for the exit. When prices rise too fast, greed kicks in, leading to predictable overextensions. FOMO, VPR, by analyzing the rhythm, the frequency, and amplitude of these collective emotional responses, effectively captures their recurring bands. These more often than expected setups aren't just random blips on the screen. They are echoes of how human emotion, amplified by collective behavior, plays out again and again in the market. VPR quantifies these psychological tendencies into patterns we can see. It's about recognizing that beneath the surface chaos, there's a collective pulse, a predictable human response manifesting in these rhythmic patterns. The VPAR index essentially provides a lens to see the overlap of these recurring setups. That gives them a higher probability edge because they align with these fundamental human behavioral tendencies in markets.
That's a really profound way to look at it, the market psychological heartbeat.
Wow. Okay, so with this deeper understanding of VPR, let's bring it back to the practical side. What does this all mean for you, the listener, if you're looking to apply this knowledge?
Our source material gives clear, actionable strategy scenarios, makes these insights really practical.
Indeed. These aren't just theories, they translate directly into strategy. First, let's talk entry points. The source suggests aligning them with VPR's rhythm shifts combined with decisive volume surges. That combination is crucial. It means you're not just looking for a pattern in isolation, you're specifically waiting for VAR to signal a change in the market's underlying pulse, maybe that compression breaking out or a rebound rhythm kicking in. And then you confirm that change with a significant, clear increase in trading activity, in volume. This dual confirmation, which is kind of unique to VPR's rhythmic insights, significantly increases the probability of a successful entry. It's different from just jumping in based on volume alone.
So it's about confirming the internal market rhythm, the VPR signal.
With the external show of force.
Exactly.
The volume.
That makes perfect sense.
Yeah.
Okay, and for managing risk, where does VPR come into play for stop losses?
Right. For your stop loss, it strongly advises basing it on those trap resolution levels we talked about earlier. As we explained, VPR identifies very specific price points where prior market moves, or traps, are resolved. These aren't just arbitrary sports resistance lines someone drew. They are dynamically identified by VPR as points where, if price breaks beyond them, the underlying rhythmic setup has demonstrably failed. It's broken. So, placing your stop loss just beyond these VPR-identified trap resolution levels gives you a logical, historically robust exit point. It protects your capital much more effectively than, say, a fixed percentage or some random price level. It's about knowing exactly where the market's rhythm would be broken, signaling the trade just isn't valid anymore.
That's a very precise way to manage risk, yeah. Aligning it directly with the indicator's core logic. Okay, and finally, the flip side, taking profits. Where do we look for target zones?
Good question. For target zones, the source points to expansion following rhythm breakouts. When VPR detects a compression building and then signals a breakout, a strong rhythmic move out of that tight range, it also gives insights into the potential scale of that expansion. How far could this thing run? It's about understanding how far the market's breath or pulse can reasonably extend after it breaks free from that compressed state. VPR helps identify where that rhythmic energy is likely to dissipate, giving you clear, calculated profit targets. And these are based on the historical behavior of similar rhythmic expansions. These aren't just general take profit at the next resistance ideas. They are calculated zones where the market's current rhythmic energy suggests a high probability of reaching.
Wow, that's really comprehensive. It literally takes you from identifying the setup to entry, managing risk, and finally planning your exit, all through the lens of VPR's unique rhythmic insights.
If we connect all this back to the bigger picture, I think the core message from this deep dive is pretty clear. While no pattern can guarantee future outcomes, let's be real, the VPI rhythm index setups, they're definitely not random. They're deeply rooted in observable, statistically significant patterns of market psychology and historical tendencies. Recognizing and understanding these specific VPI rhythmic patterns is just crucial for getting a handle on potential market moves. Whether you're a short-term trader trying to navigate the daily noise or a long-term investor looking for those bigger foundational shifts in market direction, it's really about building a more informed, a more nuanced perspective on what the market might be doing next.
So stay alert. Because these repeating flows, these market rhythms highlighted by VPR, they're often the very moments where markets consolidate, build up that energy, and then ultimately change direction. The question for you is, now that you're armed with this deeper understanding of the VPR rhythm index, its specific patterns, its psychological underpinnings, what market rhythms will you start actively looking for in your own analysis? How will you begin to tune into the market's heartbeat?